Well, hello. We have made it to May 2023. Wanted to share with you the latest market data here in the Austin metro area. We're going to start looking at some data here from March. Then we're going to work our way to some of the statistics over the last month and few weeks. Starting at this chart, this again is data through March. We are the orange line that you can see here. This is number of sales. We are trending below the last 5 years in terms of sales, but we are basically in line with the seasonal trends that we see at the beginning of the year. You start low in January, which is really January are December sales that are closing in January. February are January sales. March, is February sales, etc. So you can see that the pace is picking up. We're trending pretty evenly with other years. We're just lower in the number of sales themselves. If I look at volume, same trend. Again, this is more on the price. We're kind of more in the middle. Why? Because our price is higher than it was pre-pandemic. And that's why you see the price a little higher. Median sales price. So again, here we are. These are 2020 is your burgundy line. 2021 is your purple line. Light blue is 2022. So we've already given up pretty much all of 2022's price, but we're still trending maybe around the 450 mark, at least as of March. I expect this spring we're going to see a light increase in the median sales price, but we're going to start, as you see every year, it's going to start to level off in the summer, slow down, and maybe decrease in the fall. My prediction is, and I've said it since the beginning of the year, I think we're going to have a fairly flat year. I don't think we're going to see a lot of appreciation. Hopefully, we don't see much more depreciation either. But right now, it's a positive sign. We've seen some spring activity, some spring demand. Interest rates, and I'll show you that in a second, have generally hovered sideways. It's been volatile, but once you look at it, it's basically mid sixes for most of the year. We're seeing that trend continue. So there's your median sales price, average sales price. Again, you can see that little bump from February to March. Not a huge, it's the first time we saw that since an upswing since March to April of 2022, which again is in the spring. So we're probably just seeing a little bit of that spring seasonality show up. Total listings. So right now we have more listings on the market than we have had at this time in the last 12 years. And I'll show you that data in another chart too. So we have more listings on the market and fewer sales than we've had in the last decade. So that's why we're going to see more inventory. Fortunately, a lot of sellers have stayed off to the sidelines. We're not flooded with even more inventory. I think a lot of sellers got hurt last year, not being able to sell, took their homes off the market. I think a lot of them are sitting out a year, waiting to kind of see what happens. So the sellers that are selling, the buyers that are buying right now are more serious. That's good because they need to buy, they want to move. And so that's what's driving the market right now. And then months of inventory continues to trend up. And again, that's the blend between number of active listings, number of closed sales. How long do we think it's going to take? This is saying it's about 3. I'd say we're closer to 4 months of inventory. So this data is a little behind, but we're probably a little higher on this chart here. Okay, so that is March data. Let's take a look at data through April 27th. This is a blend, this chart up here. So this is just looking at 2022 versus 2023. Let me see if I can zoom that up for you a little bit. So total sales were down about 21%. Again, only 4 out of every 5 buyers or pace of buyers that we would have seen last year are buying now. So we're down around a little over 20%. Average sales price, when you blend it, we're down about 10%. Median sales price is down a little more, about 12% over the first quarter through April of last year, which was the hottest time of last year to now. I expect we're going to see those numbers climb over the next couple months, and then they'll start to come back. Days on market, about 75 days. So again, if you list your home, what's the average? It's about 2.5 months. So, it's hard. I can tell you, it's very hard for sellers to get used to that. You're ready. You want to sell it the first weekend, and, everybody does. But the hard part is buyers have a lot of inventory to choose from and less competition. And when that happens, buyers can take their time. They get more opportunities to go see multiple homes and can even start a negotiation process with the seller that, again, may take a little longer than normal. All right, so here's some interesting data here. So 2023, active listings were sitting around 9,700. The last time we had that many properties for sale at this time of year was 2011, we had 11,000. And that was coming out of the Great Recession and back into stronger markets. But 2021 was still petering its way back. By the time we got to 2012, it dropped, and then it dropped and dropped, and we stayed low after that. So 9,700 homes. We haven't had this many homes for sale in 12 years. So if you're a buyer, you have the most inventory you've had the opportunity to look at. Some of that is new construction as well. We have a lot more new construction in the market than we would have had back in 2011 because those builders had been bitten in the recession. So we have a lot of new construction. That's helping increase the inventory. Pendings is the other side of the scale. How many people are buying? Well, we have about 3,600 homes right now pending at this time. The last time we had that few homes was not even on this chart. And so in the last 11 years, we have not had this few contracts pending. So again, more inventory, fewer buyers means months of inventory is growing and the market is just trying to hang on to its current price range. All right, why? Here's why right here. So this is the affordability index. Burns Research, John Burns Research puts this together. So this is looking back to 1985 to today. Now, affordability is kind of a blend of several metrics. Number one, what's the price? Number two, what are the interest rates? Because it plays a big factor on affordability. And number three, how much money do people make? What is the median household income? And they tell you in this fine print how they come up with this metric. But if you look back at the beginning of the 80s, you had high interest rates. The economies were just starting to pick up and get hot in the mid 80s. So it made things more affordable. You had a savings and loan crash in the late 80s. And again, the interest rates started coming back down. That helped drive affordability. Things were pretty affordable in the 90s, in fact, below the median. Then you had home values, skyrocketing before the Great Recession. You had a run up and they got, 40% of median income. So it really became unaffordable right before Great Recession. Boom, it falls. Interest rates also came back down. Home values came back down. And of course, we then went under for the median, for the average affordability index. It went down again. And we had low interest rates for the past 12 years until we get to when? 2022. So if you look at 2021, even though the home values were going up a lot from COVID, yeah, they were going up, but we still had low interest rates. And so low interest rates, good salaries, you had stimulus money. So actually the homes were still relatively affordable for people. But then you have higher prices, and then you turn on a doubling of mortgage interest rates in 9 months. Boom, it shoots the homes to unaffordability super fast. And what's happened is that's what's putting pressure on not only Austin market, but nationally. Now, this is a national chart. So most of these markets peaked out last year on unaffordability. Since then, home values in some of the more expensive markets have come down. So again, nationally, we've seen a little bit of a drop. We're back down maybe into the 42% range, it says currently. But Austin's probably a little farther down. Why? Because we've had more of a decline in those home values from the peak of last year. So Austin would be a little more aggressive. Number one. Number two, we do have a higher median income in Austin. And so that's helping bring us a little closer back to affordability. But it's not going to come back anywhere near that green line until mortgage interest rates start to slow down or come back. They're going to stay at 6%. That's going to keep us up here. And that's where we're seeing more inventory, fewer buyers, because everybody's bumping up on that affordability index. So where are rates right now? Move my little screen there. So here's today. If you're a buyer right now, you're going to go out and get a 6.5% mortgage rate on a 30-year fixed. If you can afford it, which most people, I don't know if I've had a buyer use a 15-year fixed rate loan because your debt payment would be so high, but you can get a little lower. You can get down to maybe 6%, 5.5 or 5.9. If you're a jumbo buyer, meaning you're over $726,000 as your debt. So if you're buying a more expensive home, you might be on a jumbo loan. Pretty much everybody's going to be in the sixes, whether you're VA, FHA, using an ARM, 30-year fixed, doesn't matter. All buyers right now are in the sixes. And so they're very price sensitive. And so, listing a home, if you're a seller right now, it's super critical to really watch price, look at your competition, judge kind of the activity that you're getting on the home, and ultimately know that you're in really stiff competition with more inventory than we've had in the market in 12 years. If you are a buyer, obviously, I've said this before, I'll say it again, start with your lender. That is the weapon you're using to go buy a house. Make sure that you are comfortable with the payment, that you understand where the flexibility is if the rates go up a quarter point or down a quarter point, so that you're not just buying right up against the top of what you can afford, but you're giving yourself some wiggle room. And use that when you start to scout houses as well. Make sure you're not searching too high on your search, because if rates move a little, all of a sudden the house you liked might become unaffordable or you can't get a loan for it. So make sure as a buyer, you're scouting that as well. I hope this is helpful. This is at the beginning of May. We are in the peak of the spring sales season. This will take us through mid-June, and then it kind of shifts to a summer market. So, hey, we would love to work with you. Obviously, if you want to follow all these videos, take a look at our YouTube channel, Ryan Kelly Group. You'll find all of them there. And until then, we hope you enjoy the start of May, and we'll talk to you soon.